welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at 10110. 10110 is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Okay, before I jump in with Megan, today I have an ask. I'm helping NCSoft hire an LA-based VC associate. It is a great role for someone looking for a job in VC. We are looking for someone with some investing experience and fluent in Korean. Megan Guy is a partner and co-founder of King River Capital, where she's investing out of a $100 million fund too. Prior to starting King River, Megan was at the Nature Conservancy and the Angeleno Group, where she led venture and growth equity investments. Prior to that, Megan was an investment banker at Goldman Sachs, where she launched the firm's Global Environment Markets Group. Megan, thanks so much for joining me today.
It is a pleasure to be here. Thank you for inviting me.
Great. Did I get the introduction correct?
Yes, it was perfect. It made me laugh a little bit. I just started watching Schitt's Creek. There's an episode where they're filming a commercial for a winery and she gets drunker and drunker and the words slur more and more. I just had little flashbacks.
Thanks. I'm doing well so far.
Yeah.
Awesome. Let's start with King River rather than having me talk anymore. Just maybe you can give me the basics or a little bit of the history.
Yeah, sure. So we launched King River about 2.5 years ago. It's myself and I have two investing partners and co-founders. They are based actually in Sydney, but both are Californian by birth. We got together because we saw an opportunity both to really capitalize on an emerging entrepreneurship market and a pretty exciting startup scene in Australia, but also because obviously there's just a fantastic venture community in LA and California and beyond in the US. Companies don't have to have a core thesis that touches on both Australia and the US, but obviously we can be particularly helpful to them in those two geographies. So our first fund was about 40 million. And we did about 50 million of co-invest on top of that. We invest in software businesses, Series A through Series C, and all kinds of different business models really within that category.
Got it. And you're at the start of fund two now.
Yes. We just had a first close on our second fund, which is going to be a $100 million fund. We still hope to do a lot of co-invest there. So I think we'll probably end up, when all is said and done, having a comparable amount that's directly being invested by our LPs alongside us into deals.
And so that allows you to be investing in these, what you said, Series A, B, C companies because you're writing larger checks.
Yep. We've had a lot of flexibility in how we can do that to date, really because of the co-invest program. In our new fund, our average investment we want to make in a company over its life is probably 10 to 15 million out of our core fund. And then we could do multiples of that in co-investment. So first check, probably 3 million on the low end and up to probably 10 on the high end. But we don't have any requirements around ownership percentages. We can lead, we can follow, we can be pretty flexible.
That's great. And so tell me more about the companies that are sort of in your sweet spot.
Yeah, so I would say we've done a fair amount in AI, not as much as you guys, but that's been a pretty consistent and strong theme. We have a fair amount in fintech and then healthcare, digital health. And then I would say we've gotten really excited about a number of companies that are addressing the long tail of SMEs and SMBs and helping scale up and provide services to them. And I think that's a segment that's been overlooked.
Do you sort of think about sort of minimum levels of traction or anything like that you're looking for?
Yeah, I'd say we're looking for post-revenue generally, and probably like $1 million plus in ARR, I would say is the low end of our sweet spot. But the big thing really is we want to see evidence of product market fit and starting to get, traction and expansion with key customers. We tend to get excited when we really start to see that evidence of the proverbial flywheel turning and growth both within a customer base and then expanding the customer base as a whole too.
Great. Any fun ones from Fund One?
Yeah, I can mention one. There's a business called Lark Health that we led their Series C round, but actually got to know the company probably almost 12 months earlier. And we basically did a bridge note to put us in pole position to ultimately lead the C. Lark is a super exciting business, particularly at this moment in time. They provide a fully AI solution to help people living with chronic illnesses manage those more effectively, more consistently, and frankly, like more empathetically. I think, what got us really interested in the business was that the software and the technology they had built was actually helping patients to engage and stay engaged with the app. And so they're serving several million patients at this point. And we saw really strong evidence of them being able to go from a small pilot to a larger pilot to scaling up to population levels. That just got us very excited.
And so tell me more about what you said there about leading a bridge note, which allowed you to lead the round.
Yeah, we had gotten to know Julia for a while. And actually, this is sort of a good example where, for me, in working at King River versus my previous experience at Angeleno Group, Angeleno's a great fund, has about $500 million under management, but much bigger check sizes and a much more institutional LP base as a whole, I would say. Our LPs, for the most part, are high net worth individuals, people who've often been entrepreneurs themselves. And so actually one of our LPs is a guy named Dr. Jonathan Fielding. Being in LA, you may have heard about him. He's Fielding School of Public Health at UCLA is named after him. He's a wonderful man and a really incredible physician. And he had gotten to know Lark alongside us. He'd helped us with some of our diligence and actually ended up going onto their advisory board. We wanted to make sure that we were in the mix and were able to get pole position kind of in helping lead the company's next round.
So you're now pole position, you're leading the Series C, but you're a $40 million fund and you've got this co-invest. Can you educate me on the mechanics there?
We kind of make a commitment. We tell the entrepreneur what we want to invest out of our core fund. The fund always gets primacy. And then to the extent that there is more space in the round or the company is open to taking more capital, we can run a pretty tight process and in a couple of weeks kind of touch base with our LP base and figure out how much demand and additional capital we can bring in. And that's why a $40 million fund is able to lead a Series C round.
But the company isn't getting all of your LPs as directly showing up on their cap table, right? It's still run through King River?
It's managed through King River. Yeah, the mechanics of it are a little bit different depending on the geography. And with this particular one, people were able to invest directly, but basically we manage a lot of the rights and decisions around that. So it doesn't create additional burden for the entrepreneur or for the company to manage those shareholders. They basically just work through us.
It's reasonably similar to how an SPV works.
Reasonably similar, yes.
Okay. Okay, great. Well, let's count that as the basics of King River and let's go backwards and talk about your background.
Yeah, so I think the two things I'd say that sort of define me as an investor are one, I love really complicated and interdisciplinary problems, which I think is what makes venture really fun for me. And then the other thing I'd say that's been a really common thread through my career is I'm very mission driven, I would say, as a person and an investor. That was obviously when I was at the Nature Conservancy, which for anyone that doesn't know, is the world's largest global conservation organization.
How big is it? It has a huge operating budget, doesn't it?
It's huge. Yeah. I don't even know off the top of my head anymore what it is, but like when I was there, they ran a $5 billion capital campaign. Now, this is a very large business, probably on the order, I would guess, of $1 billion a year in top line revenue. And so I joined them actually at the time. The CEO was a guy I had worked with at Goldman, starting the environmental markets group there. He was very passionate about bringing more private capital into conservation because there's just a huge gap between the philanthropic capital that space receives and what we actually need to invest to address, climate and all of the other ancillary environmental problems that flow from that and social problems. And so my role was really about trying to figure out how do we get companies engaged in this space? How do we create new investment structures and products that enable them to think about them the same way that they would think about another capital investment or a project that they wanted to do, and start to bring much more significant order of magnitude dollars into the space, not just to TNC, but to companies committing money off their own balance sheet.
So is TNC bringing in some expertise to sort of help the corporates build out these programs?
Yeah. So TNC, again, I'll get the exact numbers wrong, but when I was there, it was something like maybe there were 4,000 people in the organization and like almost half of them were PhD level scientists. They're just really top tier thinkers that are able to build, it's much like building a financial model. It's just an ecological model of some sort, whether you're looking at the return on doing a big reforestation project and trying to understand what's the value of the timber that you'll generate or the jobs you create, as well as the carbon that ultimately gets sequestered there. Those are some of the types of experiences and expertise that the Nature Conservancy brings, plus that on the ground expertise, which of course, any project you're doing, I think in the environment space has to be supported and really led by local communities. And so having those relationships and being able not just to get input, but leadership from those that are going to be most directly impacted.
Before TNC, you were at the Angeleno Group. You were an investor there.
Yeah. Yep.
What are the interesting sort of subsectors, I guess, in clean tech?
Oh, good question. I think there are a whole bunch of areas. So while I was at Angeleno, one of the big areas people were investing was in the hardware space. So whether it was new, better solar cell technologies so that we got more efficiency out of panels, or new battery chemistries to enable us, to store more energy or do it more safely. There was a lot of that kind of innovation happening, and that's tough, right? It's capital intensive. It's very long timelines. What is super exciting to me right now, I think, about the energy space and the clean tech space is we're now ready for this whole awesome application layer and consumer layer, frankly, to sit on top of all of that hardware that now is out there in the field and has been working for many years. And so I think there are really cool innovations that we're going to see. I mean, one, as an example, is a business called OhmConnect. They have been able to help individuals moderate their power usage so that it's enabled the load to actually stay below the points where we have to get triggered and have blackouts in the state. And it's actually also really neat because it's a lot of lower and middle income families that are getting, paid quite a bit of money in some cases to help manage the grid. And so it's awesome to see these really great minds applying a lot of what we've seen work in the software space now to some of these big global problems.
So you needed these multi-billion-dollar physical infrastructure type projects, and now you can have software solutions selling into them.
Yeah, exactly. We've got electric cars now, right? So we have storage solutions, we've got solar on people's roofs, and there's a whole intelligence layer that I think we're just at the beginning of overlaying on top of that. And then the other space I'd mention actually that I think doesn't get a lot of attention, but to me is every bit as exciting as thinking about climate mitigation, is what's referred to as climate adaptation. So what are the types of products and technologies that are going to help people adapt better to a changing climate?
Yeah, but wouldn't you rather mitigate than adapt to floods and fires?
100%. But it's not an either or, right? We're living with it already.
Maybe we should all just be clean tech investors. Boy, yeah. Well, you had these experiences at TNC, at Angeleno Group, at Goldman, and then you got together with Zeb and Chris and decided to start your own fund. How did that come together?
We came together. Zeb and I obviously had worked together at Angeleno, and I think
he's one of the founders of Angeleno.
Yeah, he was one of the founders of Angeleno. We met, I think, actually when I was at Goldman. Anyway, we reconnected down here when I got out of business school, and had just really enjoyed working together. And he moved to Australia. We had a couple investments in Australia, and we had both worked there on and off in our earlier careers. And anyway, so he moved there probably must be 6 or 7 years ago now. But we always just said it would be really fun to work together again. I think we have very complementary skill sets and mentalities as investors, really different approaches, but I love that about working with him. And he and Chris had ended up, I think, as angel investors or seed investors in a couple of deals. Chris was running a fund. Chris was ex-Goldman, ran Goldman's financial institution group in Europe, and then had spun out and started his own venture fund out of London. And so he and Zeb had gotten to know each other through a few deals, and that was kind of how the three of us came together. I said I love the interdisciplinary nature of this work and the mission piece, and I think we all really shared those values. We're not an impact fund, but I think we all tend to get excited about companies that we feel are working on pretty meaningful, significant problems. And we also all love Australia and California, and the opportunity to be able to work really across those two geographies, I think, was pretty compelling for us. And we like having a really small partnership and team. We're not, I think, ever going to be a firm that has 100 people working here. We really like more the benchmark model, right? Where everyone does their own work, and it's a pretty small, tight-knit group. So
Go ahead.
No, I was just gonna say, I think all of us having been at much larger funds before, you get, the benefit of being able to write a much larger check. I think that can also be tough, because it's not always the best thing for a company to take $20 million or $30 million, right?
So you said you guys have different approaches.
Mm-hmm.
So where are you? What's your, are you the cerebral one or the,
No, I wouldn't say that. I think we have different things that we get really excited about, I think I love about Zeb he is like this eternal optimist, and he just is able to see really like the big vision pretty early on. And it takes me a lot longer to get there. I was an investment banker before I became a venture capitalist. So I'm like in the weeds and the details. And I think like that combination for us has always worked really well. Chris kind of straddles both worlds a little bit, but I think what's great about him is he's got a really rich network in sort of the AI and the fintech space and a lot of experience there. I wouldn't say any of us get really excited about the same businesses at first. And so it's a great test of, have we done our diligence? If we get more than one of us to be like, wow, this is a really compelling, exciting opportunity.
Anything else coming from the investment banking world that's just been a big change in the venture world?
Maybe it's like a big organization to small organization thing, because I think both, Goldman and the Nature Conservancy and Angeleno to some degree, it's not a big team or anything like that, but it's a lot of money and it's definitely an institution at this point. I think the biggest thing has just been like, we have to do everything ourselves, like at the beginning, right? It was like when we first started the fund, and fortunately, both my partners had started funds before, so we weren't completely flying blind. Still, it was like we were our own back office for a period of time until we found someone we could hire, and just everything has to get done by someone. And when there's only three of you, that's the path. And I wouldn't trade that actually for anything. I learned so much in the last 2 years. I had never really thought about starting my own fund before. And now I'm like, oh, I can do that. We did that, right? Like we've raised a second one now. And it's given me so much more empathy for entrepreneurs and just, the ups and the downs. Like we had actually right before our last close on the fund one was when COVID hit and all the shutdowns basically. And so, that was a roller coaster to experience. And like, fortunately we got it done, but I just think it made me a much more empathetic investor.
Anything else adjusting from the banker side to, being an emerging manager?
Yeah, I think the other thing I've really had to learn, you're really in sales as an emerging manager. And like, you have to get very comfortable promoting yourself, promoting your fund, promoting your companies. And from being a banker, like that was so unnatural to me. I was it's like, you don't say no forward-looking statements. It's very confidential, and like confidential even when you talk across your team about the deals you're working on as a banker. When, you start a small fund for your first time fund, that's kind of the name of the game, right?
Yeah, it's the opposite of no forward-looking statements.
Yes. Exactly. It's all about the forward-looking statement.
One thing you told me that I was a little jealous of is you've been part of the emerging manager group. I think you have a group as part of All Raise.
Yeah.
What have you learned there? What have been some of like the interesting discussions? What am I missing?
You should join. All Raise, for listeners who maybe aren't familiar, is a nonprofit that was started a couple of years ago by a bunch of top women in venture, trying to bring more women and people of color into the investing and the founding community. And so it's a fantastic set of resources. I'm part of, there's like an emerging managers Slack channel that's been really helpful. People share like what's market now on some of the terms as you're bringing new LPs in or thinking about raising a new fund, or just lessons learned. And then I'm also part of a partner cohort, and it's been really, I think, helpful for all of us to just hear each other's experiences, to share deals. Like we're really trying to focus on how do we make this whole group successful.
Any good meaty discussions lately, or specifically, how did you think about setting up your co-invest program?
Oh, good question. Yeah, co-invest is one that I actually talk with people about a lot. Like I was talking with a friend actually at a really big asset manager the other day, and he was asking about how we did co-invest. And my friend was actually having a credit line to fund co-invest, because we can do it pretty quickly on our end because we're working with individuals. And as I said, like they're able usually to rely pretty heavily on our diligence. My friend works more with institutions, and that's a really different and longer process. And so for them, I think they've had a risk sometimes that if they want to do a lot of co-invest, they may lose a deal because they won't be able to move as fast, or there's some uncertainty around that amount of capital in the allocation.
How about any good insights on valuations? Or for your investments in Australia, is the Australia market at least a little more reasonable?
What I'd say that's funny is, well, funny is not the right word, but we're seeing it in Australia too. It's not just a Silicon Valley problem. One thing we all struggle with is like valuations, and just the nature of this industry at the moment is pretty crazy. Whether you're at seed stage or your growth stage, and talking to the SPACs, it's like I think everyone is kind of scratching their head a little bit at what it takes to get a deal done. I think like we try and be pretty disciplined. Like we're certainly not value investors, right? Where we're nickeling and diming, like building really detailed models. We're not on the private equity side.
Right. Another thing you said, maybe on a panel I listened to, you said you really dislike the notion of that's market.
Oh,
tell me what you mean by that.
I think that was in reference, we were talking about diversity, maybe?
Yes.
I know it was a SaaStr event. And I think at one point, we were talking about diversity. And I think part of, for me, like solving that problem is also rethinking not just the structures around how we hire, but like, how do we pay people? How do we compensate them for the knowledge or the experience they bring when it may look different from the experience I bring and from people who've come from a more traditional background? I feel like I'm very tired of being told something shouldn't be this way or can't be done that way because it's not like quote market. And the fact is market has been set basically by a bunch of highly educated, like affluent white men for the most part.
Well, that's market. When you think for yourself what you want to build, what you want to be known for, what does that look like?
Yeah, I want to be just known by the people I work with, both as co-investors, the founders, and the employees of the companies, as just like somebody who showed up for them. Like I probably should focus more on building a VC brand, but to me, my brand is how I show up to your meetings. And when you have a good day and when you have a bad day, like I want to be the first person that you call. I mentioned Benchmark before, just in kind of their structure, and that's obviously a firm that's got a fantastic brand and history, and we've had some huge successes. And, as I said, like I'm mission driven. I want to be like solving important problems in the world and doing it in a way that has really high integrity and ethics. And, I feel like you can be a really nice person and also be a good VC. That's my hope.
What do you mean by Benchmark as an example? So I think of them as having a flat structure. What do you think of when you look to them as an example?
I think the way that they have brought new partners in and transitioned old ones out, I don't see others do. There are a lot of firms where the people whose names are on the door or whatnot haven't been active for a long time, but they're still taking a significant cut of the carry, and they're a really big piece of kind of influence and direction setting at the firm. And I just like really admire that they didn't set out to build a firm that had people's names on the door. They set out to build a firm that was going to be a great partner to companies. And it's pretty impressive that they've been able to entirely turn over their partnership several times, and that brand hasn't.
Okay, couple more questions. So when you're not investing, when you're not working, how do you spend your time?
Ooh, good question. I have been a big runner. I used to run a couple marathons a year. I have 2 dogs, and one is a retired sled dog who actually ran the Iditarod back in the day. So she is now retired to the beach and running much slower, shorter distances with me. So yeah, it's been an awful lot of time with my dogs this year.
Oh, that's great. What beach do you bring your dog to?
Huntington.
Oh yeah, you go down to Huntington.
It is a haul, but it's awesome. Like they are so happy there. It's just when you have a bad day, honestly, like I feel like Huntington Dog Beach with just all these dogs frolicking and the waves and digging, and they're so happy. It just makes everything feel very petty and small.
Totally. I usually ask people how someone should get in touch with you if they want to get in touch. But instead today, I'm going to read from your LinkedIn. It says, if you are a founder raising a Series A or later, then please send me a thoughtful DM. I really like that.
You would believe you get them too, I'm sure, but there are a lot of just mass DMs that aren't thoughtful at all. Like it takes 2 seconds to actually read my LinkedIn and see what it is I'm interested in and I invest in. So yeah, I try and be really good about responding to that. So I would love to hear from LA based or other places, founders that are working on cool problems that I might be able to help you solve.
That's great. Megan, it's been great to get to know you and have you on the podcast. And I'm looking forward to more from you and King River.
Yes, thank you so much for having me.
Today's episode of LA Venture is sponsored by SaaSoft, offering customized software development for your startup's needs. SaaSoft is a group of top software developers, all based here in Los Angeles. If you are looking to build a new product from scratch, or if you're a founder that needs help accelerating product development, SaaSoft can help. Head to sassoft.com, SAASSOFT, for a free consultation.